Hi guys, welcome back. Surprise, surprise, another one of those days when the market is generally going up and our stocks are going down. This is just another day, isn't it? So let's do a little bit market update first. So far, the S&P 500 is just slowly climbing up a little bit at a time, and Nasdaq consolidating within a narrow range. Same opinion remain on the Russell 2000. I think it's just consolidating between this small range between 218 and 223. So far within a very small range. I think it's gaining the momentum to break out. It will take as long as it needs. A few weeks ago, I made the prediction on the Russell 2000 to make a double bottom like all the other times. And I think it did form a little bit double bottom so far, and I think this would form a good and healthy base. So last week I said we would consolidate between 218 and 223, and so far it's still true. Very small consolidation. And if you stretch out to a longer term, you can see that ever since January this year, it had been on this platform consolidating. Again, after such a crazy run up, to consolidate without falling further down, it's a sign of strength. So I think breaking out is just a matter of time. And because we try to break this top tier of 233 already 3 times in the past. So I think with some consolidation, the 4th time of trial, it's gonna break through. That would be the prediction at this stage. Okay, so hang in there if your small and medium cap stocks are not growing with the market. And if you feel that your small, medium caps or Chinese stocks have been falling like every day, it is not. It's just a feeling mostly because a lot of the stocks are just consolidating on the side. Like 2 weeks ago, I predicted EH would move around between this small area, 24.9 to 26.3. And that was a picture captured 2 weeks ago. And 2 weeks later, it's still moving within the same range. No breaking out, just consolidating, resting. This period of time is usually long and torturing, making you feel like there is no hope, even though it's not moving much, not rising, not dropping either, but it does make a lot of retail investors lose patience, lose hope, and eventually cut losses. There could be a few reasons. First of all, Chinese stocks and a lot of medium small caps had a great dip, a really big fall a few weeks ago, and it's not gonna be a V-shaped recovery like this because there were a lot of damage on confidence, on faith. That's why the best case scenario is for it to bounce back up a little bit and consolidate on the side without making lower lows. That would be already fortunate. And the second reason is usually in summer, a lot of fund managers are on holiday. There's not too much happening in the stock market or the financial market in the whole world. It's usually like this. So you can see a lot of stocks are just going up and down, going up and down. If they go up, it will go down eventually. If they go down, and then it would rebound a little bit later. Some people might call it a boring market in summer. So I would just say hang in there and take the chance of every day to buy in what you believe in the most, the long-term position, because nobody can expect to buy at the absolute bottom. Not even the most genius fund manager can do that. So the best way is to dollar cost average. Not buy in all at once. Don't go all in on anything, but rather split your investment and buy in slowly. Every few days, every few dip. Some people are worried that there is a 5-year plan of regulations on Chinese stocks, and a lot of the investors would try to run away first and wait for the regulations to finish. But the thing is, it's not gonna be finished anytime soon because it will be in part of the big plan on the regulation of the new economy in China. So it's not gonna go away, but the only thing is to adopt it, embrace it, and take advantage of the regulations, because some would be beneficiary to certain sectors, certain stocks. I think that's how most of the institutions are responding to the regulations now. Either you stay away or you just understand the logic behind, understand the intention, and take advantage of it. So I would say at this point, any bad news might be a good buying opportunity because the extreme fear stage was passed. And I think at this point, a lot of the fund managers are studying the strategy on Chinese government, trying to understand the thinking logic behind. Take a look at Hang Seng Index. I think it had the bottom on the day it was extreme fearful, and I called out the golden dip there. It had been stabilizing and steadily going up a little bit every day. Recently, having a little bit pullback, but it might be just to challenge. The next goal is to close the gap. I think a lot of the bad news had been out already, and there are still a lot of good stocks, quite potential, and not even under any threat of regulation, but the opposite. It's more like the government is pushing for it. Like, for example, Geely Auto, BYD, and also a lot of the stocks in the health sector. BYD had already broken the February high, and Geely had not yet, and I think it still had a lot more room to grow. BYD had been growing the strongest, but out of all the car brands or stocks in the EV sector, Geely might be the one that's the most undervalued for now, I think. So it has still a lot of room to grow. And every time during the big crash or fall, we can see that the big capitals are buying the dip of Geely and Xiaomi the most. So that's why it had been the most crash resistance. So I think the big capital are also thinking that Geely has a lot of potential to grow and still quite undervalued, even though it had grown 50% from the low of a few months ago in May. It seems like NIO had a big sell-off after the earning, but it's not that true because the whole sector, the whole EV sector is correcting a little bit recently for a few days, and it is mostly just had been consolidating within this range for the past 2 months. It had back tested the support of the 250 MA this morning, so I think the opportunity is showing itself again. Last time it hit 38, I think it was a good buy, and now it gave another opportunity to backtest the 250 MA again. So you see, every time it tested this, it usually gets supported. But in any ways, for the short-term price action within a year or so, I don't think you would regret holding NIO through this correction or buying the dip at the 40s. Same thing with Xiaopeng. You know that I had the automatic order to buy at 38. I don't know if it gives me the chance or not later. I missed it a little bit. This morning it reached 39. I had this limit order last week when it was 43, so a little bit of a miss. Same thing with Li Auto. Opportunities are showing itself again, so as long as you don't have to buy at the absolute lowest low of the bottom, you can still make money, I think, because no one can catch the absolute bottom. Some of you might be concerned about the market situation, because if the US stock market gets into a correction like 15 to 20%, what will happen to the Chinese stocks? Or potentially a crash. S&P 500 is still on an uptrend, even though it had been going up without much correction this year. Climbing up slowly and steadily. But I still don't think there would be a crash right now, even though I heard so many voices saying there is a crash. And the reason is, first of all, the pushing up of the stock market so far is not driven by the fundamental of companies, but because of the money printing. And it is inflation that's driving it up. So it looks like the index is going up, but in fact, it's actually just the money worth less. So if you compare S&P 500 with the gold, so let's say there is S&P 500 compared to the index of gold or Bitcoin, because gold and Bitcoin would be a hedge against inflation, right? So if you compare that, you would find that the S&P 500 did not grow that much compared to the speed of the actual money to be worth less. So because right now a lot of equities investments seem to be too risky, so most of the big funds are putting their money in the S&P, because buying bonds or keeping cash would slowly reduce value. Even if the crash is coming, that the US economy is getting into too big of a crisis, the big institutions of Wall Street, they still need to exit. And because they have a much bigger positions than the other small to medium institutions and us retail investors, it will take them a long time to exit, step by step. Like Goldman Sachs, the first half of 2021, they have sold off 25% of their total position of stocks. And how do they exit? They sell it to smaller institutions and retail investors, right? But right now the market sentiment, it's quite low. The fear and greed index had been below neutral for a few months already. Ever since the big rebound in May, it had been mostly wandering between extreme fear and neutral. So how do they exit if no one buys it? So usually the bigger institutions, the Wall Street, they need to exit when the market is in the greed mode. So I think even if there is a crash, it needs to run up first so the market can gain back a little bit more confidence, so then the big fish can exit. If there's a crash, you can compare last year in the COVID crash. Take JD for example, because the crash for COVID happened earlier in China. So this was at first dropping from 40 to 35, 36 because the COVID crashed the Chinese market first and then move on to the rest of the world. And this is when the US market crashed. So it was mostly crashing, rebound, and then have another dip before bouncing back up. So from the low of 36 to the low of 32. So yes, it was making lower low, but that was more like the final shake before the run up. In case the US market would crash, it might be what happens. But right now, I think 2 weeks ago, that looked more like a big shake out of a lot of the institutions. And right now, it's just consolidating, waiting for something to happen. What is it waiting for? I think the market is waiting for some signals, some kind of news or some kind of events to happen. Last time I mentioned about the October National Day because last time, right after the July 1st, the 100-year anniversary, the market was crashing because the bad news waited for the event to happen. So this time, investors might be waiting to have the National Day event to be over and no bad news to be out before. Another one thing happening in October would be the negotiation of China and US president. It is a time they finally can sit down together and talk. There is a possibility that the Chinese side is pressing down the stock price so then they can have this talk first. I think this would make sense because this way the US side cannot use the Chinese stock as a threat for the negotiation. I think there should be some rebound in between, maybe the end of August, because a lot of the Chinese stocks would be giving out earning in August. Like for example, LKCO has a earning report in August and they seem to be pretty confident about this result. EH has Investor Day in August. Also, Luckin Coffee, they should have earning this month as well. The chart is still looking bullish for Luckin. It might be gaining some momentum to break out again. So if you want to buy, you can try out your luck before earning. In case you didn't enter for the past few months and you really want to start a position. But set stop loss though. 12.7. If it closes the gap, it should go lower. JKS is showing a good dip. You have support at 46, 44, and 43. I think the solar sector would continue to outperform because the progress of solar energy, new energy in China, is going quite well. So I think companies like JKS would continue to smash their earning for the next following few years. Another one to point out is Ideanomics, ticker symbol IDEX. It has earning report next Monday, so if you want to have a little bit side bet, I've wanted to talk about this company for a while. I had it in my watch list for almost 1 year already. It's like the big brother of LKCO. The two companies had a good relationship. And for now, the share price had been consolidating, forming a triangle for 9 months already. So I would think this is forming like a bull flag. And for these few months, we're just consolidating in between, waiting to break out. Anytime it could be up, of course, it could be down as well. Anyways, right now it has been backtesting the bottom range of this consolidation. Around 2.2, 2.3 would be the strong support. See, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times backtesting the support and got supported. So I think risk-reward ratio is not bad. You can set the stop loss slightly below the support. I can talk more about the fundamental of the company later if you are interested. But in case the earning was a bomb next week, because recently all the earnings were a bomb, I think it might still be a possibility for it to be a golden dip if it breaks the support after earning. Now, LKCO is LKCO. It's doing what it does always. sideways, usually it's like a TQQQ, triple the effect of the market. If the market sentiment is not good, it goes way worse. And if the market sentiment is good, it goes way up. Super volatile. And right now it seems like it is trying to close the gap. That was a gap up in May. And if so, the next support is 119 and then one after. Weekly chart wise, it had broke the support of the 30 MA, and if it doesn't get back above within the next week or so, it had turned officially bearish downtrend. For now, I don't see any sign of reversal yet, but I guess let's see if the earning can be a catalyst. Fundamental wise, nothing has changed, and it is dipping without much volume recently. So that's it for today, and let me know what you think, what you have been doing these days. And if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.